Okay. All right. Welcome, everybody, to another episode of the PitchUs podcast. My name is Jeff Erickson. I will be hosting this event tonight and want to excuse Tim Cooley, who is the normal host. Tim is out on some family business right now. And just as a way of introduction for Tim, Tim is the author of the Pitch Deck book. If you are looking to pitch to investors, check out Tim's book. It is super helpful, and we get a ton of great feedback on that. Little background on me. I am with a company called Forecaster. We do financial modeling software. It makes financial modeling easy for founders. We also have like special offers available for anybody that's watching these episodes as well. So you can hit the link in the podcast below and find out more information about Forecaster. Speaking of Forecaster, I have my friend and colleague from Forecaster with me tonight. George, do you want to go ahead and take a minute to introduce yourself?
Yeah, absolutely. Hey, thanks for having me again, Jeff. Like Jeff said, my name is George. I work over at Forecaster in strategic partnerships with Jeff as well. So a friend and a colleague, to say the least. I've been able to, just in my time kind of working with startups, one time I was working with over 1,000 startups and have helped them raise some money as well, and do some SPV stuff on the side here and there as well. So super excited to be here and excited to hear from our special guest today, Kristen. So Kristen, if you want to pull up that pitch deck, we can kind of just get moving here.
Awesome.
Sure, absolutely. All right. So a few months ago, Kate Bush's 30-year-old song got placed on the Netflix show Stranger Things and exploded. It got 100 million streams in just a few weeks. Now, these spikes, they don't just happen once, but they happen all day, every day, big or small, across any media asset that's streamed online. But a music rights holder can have a 5-person team easily managing 20,000 songs, and they need to react in minutes when it can take months. On top of which, 85% of music rights holders don't actually have access to the consumer data from streaming that they need to identify that these spikes are happening or understand who's paying attention in the moment. And as a result, the industry is unbalanced. You see 10% of songs driving 99% of all streams. That isn't because only 10% of songs are good, it's because only 10% have access to the financial and promotional resources that they need to really drive their business forward. So at Westcott, we are unlocking that hoarded data and putting the power back in the hands of the music rights holder by taking the speed and precision of high frequency trading and applying it to ad buying in the streaming media market. So we can monitor millions of online assets and launch thousands of campaigns at a moment's notice. How it works is a subscriber plugs in their streaming data feeds, and they can turn the ad toggle on for any of their streaming assets. Westcott then automatically generates advertising assets across every single asset that is uploaded onto Westcott, and they'll then receive notifications like, hey, your artist just did a concert in Hockenheim, Germany, and saw a spike from males 25 to 34. Westcott just spun up a hyper-targeted campaign and launched it on Facebook and Instagram, driving merchandise sales. Come back in 7 days. Now, we use AI in a different way than how companies like Spotify use AI, which is to discover music on behalf of fans, while Westcott discovers fans on behalf of artists. The difference is slight, but the impact is huge. So I've personally never heard an artist walk out of a studio proclaiming that they just made the best dinner song that ever existed. So how Spotify classifies their data is fundamentally different than how I classify my information. Now, this is in an effort to elevate the economic potential of every music rights holder on the planet. with a vision to more fairly distribute value across all creators. So taking that 10% that drives 99% of all streams and distributing that more equally across all creators. On top of which, as we generate more streams across more creators, also taking that stream data and using that really valuable data to drive physical recording sales, merchandise, and ticket sales. And now is really the perfect time to do this. So in the streaming media market, we've seen mass consolidation over the last 20 years. We now have 5 publishers, 3 studios, 3 labels, and 1 ebook publisher, where the seller really controls the market. And this way of existing is starting to reach a tipping point. In reaction to that, we see the creator market exploding. It is $100 billion today, and it's looking at 10xing by 2030. Within the music space specifically, the DIY creator community is the fastest growing segment of the music industry, on top of which we had recently a new wave of players and entrants come into the space. Investment firms that are investing in music recording rights because it is as stable an asset as real estate. Over $5 billion was invested last year. Off the back of this wave of independence, you also see new services coming into play to try and make these new players as independent as possible. So these are companies that allow people to acquire and sell rights, collect royalties on rights, distribute and manage those rights, as well as market those rights. And this is where Westcott fits in. So off the back of that, there's a new emerging thesis among private equity firms and data companies in the music space that are trying to acquire a unified group of services to compete in this new space. And this is specifically where Westcott fits in. This is also a short-term exit strategy if we choose to go in that direction. Now, I've been in the music industry for about 12 years. I've sat at every seat of the table when it comes to accessing and applying consumer data from streaming to drive growth. I've released a Grammy-nominated and marketed a Grammy-nominated record, worked at a data company called Next Big Sound, wrote for Billboard's streaming Twitter charts, and then managed global playlist strategies at Universal Music Group. I know how to stretch a dollar and build a really phenomenal team. Our team is supported by 3 advisors, the ex-CTO of Universal Music Group, as well as the ex-CTO of Marketo that transitioned it into Adobe, as well as the CEO of OpenPlay, which is the largest catalog management software company in the music space. They're one of those new services. They're also in our partnership program. So when I left Universal, I started selling roster analysis reports. They were kind of like financial audits of a label's roster. I took stream data, revenue data, and expense data, and I reorganized it from album project to artist. And in doing so, I got a completely different view of financial performance. An album that saw profit, the label or the artist saw loss because the label overspent, but they don't account in that way, so they did not have visibility into that. I also saw that when labels were spending ad dollars, it wasn't aligned with when listeners were actually streaming the music online. So I made a modest model, what would be the impact on revenue if we spent when people were paying attention, and saw a 25% increase across all revenue streams if we just spent when people were paying attention. Now, since then, the customers that bought the roster analysis paid for us to build the product. Last year, we launched over 80,000 automatic campaigns and ingested over 17 million rows of data daily. We discovered that after Westcott, when Westcott is in play, after an organic spike, Westcott reduces the stream revenue decay curve by 80%. In scenarios where attention organically increases after a spike event, Westcott will elevate that attention by 2.5%. So we've already surpassed the revenue that we made last year in the last quarter, and we are on pace to hit 1 million in the next 12 months. Now, in order to do that, over the next 12 months, we're focusing on selling to enterprises through direct sales and partnerships. 12 months after that, subsequent 12 months after that, we're focusing on selling to small businesses. And then 12 months after that, we're focusing on selling to creators. Now, all of that will be facilitated through our partnerships program. And we're also charging in 2 ways. We're charging a license fee and a percentage of ad spend. when we start selling to creators, we will only sell and charge a percentage of ad spend, kind of like a transaction fee, like Venmo or PayPal. Now we have a really stacked pipeline at the moment, and in the next 60 days, with a 90% confidence, we'll see our MRR 3x. Now, in order to do that, or at least over the next 12 months, we're going to see we're on pace for our revenue to hit just under $1 million, and then 5x that in year 2. Now, that's primarily going to be driven by license revenue. In year 3, when we start selling to that long tail of creators, our revenue will be primarily driven by our percentage of ad spend. Now, on the product side of things, to get us where we want to be, at least within the next 12 months, our 3 major milestones is driving physical sales, enhancing our Catalytics AI engine, and then building a self-service onboarding tool so that we can then start selling to small businesses and creators. Now, in order to kind of fuel that, we're raising $550K at a 3.3 million cap. We've already secured, as of this morning, 60% of that. Now, 30% of that is going to go towards sales and marketing. 40% of that is going to go towards product development. And then another portion of that is going to go towards renting data sets to fuel our AI catalytics models. Now, in terms of an exit strategy, we'll do what's best for our investors in the company. We do have the option to sell directly to data companies and private equity firms, as well as traditional major labels who are looking to stay relevant in the new environment and the new independence renaissance. But if there's a space to consider an IPO, we will go in that direction as well. So what's pretty fun about the last 10 minutes is, in the last 10 minutes that I've been speaking to you, Westcott's already launched over 1,000 campaigns for artists like Kate Bush. So similar to the automation of the financial markets, only software can really monitor and deploy thousands of campaigns at a moment's notice, creating an unparalleled opportunity to capture untapped revenue for creators and artists alike.
Okay, Kristen, now that was awesome.
Thanks so much.
Seriously.
Yeah, super cool. Well, we'll kick things off here first by saying, or George, why don't you go first and share some of the things that you liked about Kristen's pitch and her deck?
Yeah, absolutely. Would you mind going to the front? Would that be okay? Just kind of
sure, absolutely.
Okay, sweet. Awesome. No, yeah, I loved seeing kind of the explanation of the problem was super, super clear to me, right? Like I really understood kind of on that next slide, if you want to even go one more, I think it was one more. I'm so sorry. There it is. Yeah, like this kind of use of AI slide, I was just like, oh my gosh, like this makes a lot more sense for kind of how you guys are even helping solve this problem. Is like, oh man, like I've seen a lot of different pitches kind of working with different companies who have done something what I thought was similar to you guys. And I was like, oh my gosh, I've actually never heard of somebody discovering music on behalf of other people. And then like possibly holistically integrating that. And then like for a leverage buyout, I thought that was really awesome. I thought your traction slide was really good. Kind of showing where you guys are at, where you're going. And then kind of, you used a couple graphs there that were just super, super informative. And I think you have a really good flow for how you are presenting. I think more so than anything else, that's what I was noticing is like you knew the next phrase and the next word even before you had it up on the slide, right? Which like a lot of people kind of when they're coming in a pitch, they don't even have that kind of confidence. I'd say funds slide was really good as well. Use of funds, kind of like hey, we have 60% done here. We're looking to get this. This is our evaluation. It's like 99.9% of the time, people just don't have that. So that was just even the slide before this one too, so I was like, these last two, I just was like, I loved, absolutely loved.
Thanks so much.
For kind of, at least from an investor standpoint of view, has really made a lot of sense for me to see this kind of projection, but also how you guys are going to use the money and, kind of what your evaluation is post money as well. So initially those are kind of my initial thoughts. I'll probably tack on a couple things as well, but Jeff, would love to hear your thoughts.
No, George covered some great points. I can echo a lot of what he said. First off, you present very well and very confidently, and you know what you're talking about. This is well done. Flow was really nice. And you knew your stuff. You've practiced this pitch many times, I'm sure.
Only one or two.
Yeah, once or twice probably. So, well, great job on that. I thought again, you hit all of the key points. And I think the other thing that I really liked your background, like you and your experience. Didn't hear a whole lot about the co-founder, but your experience was awesome, and you have a great advisory board as well. I thought the ask slide was great, very reasonable. You're not way out there in terms of even, the cap and all that stuff. So, I think overall, this was a fantastic presentation. So great job.
Thank you so much.
George, do you want to jump into anything that you saw that maybe Kristen might consider doing differently, or areas of improvement?
Yeah. I'll kick it off for us. I thought there was one part that, do you have a kind of like a market size? I saw kind of I think it was market background was the name of the slide.
Yeah, so we touched on this lightly in our long form deck. We have more traditional kind of market slides that go into the market, the creator market, as well as the music market, and where we see how we fit in both.
For sure. Yeah, no, I love that. I definitely think it would be super helpful, at least from an investor standpoint, always throw in that TAM, SAM, SOM. Initially, I think the breakdown of seeing like, I see 5 billion invested in music rights, and I'm like, okay, like, that's kind of the one thing I was like, I don't know about, is that my TAM, is that my SAM, or is that my SOM? But initially, kind of like from an investor standpoint, I would think, okay, if that is my TAM, then if I'm getting, say, 1% of that TAM, then this is, $50 million. Which from an investor standpoint, they're like, what's my next Uber? What's my next Instagram? What's my next XYZ that can lead to a crazy valuation? So I'd say, yeah, just throwing in that TAM SOM would be awesome. Jeff, I don't know how you feel about this, but exit strategy slides. I'm not the largest fan of it, and or like kind of seeing what an exit strategy would be. I think maybe kind of showing more so of like competitive stories of like maybe people who have done something similar, but not exactly saying like, here's how we plan on selling, because a lot of times investors are very much so like, they want somebody who is going to be here for 100 years until it absolutely explodes. So showing even kind of like, hey, like this is kind of maybe how I see this kind of going out there. Like sometimes it's a red flag. And then on the team side, yeah, oh my gosh, you guys, it sounds like you guys have a crazy experience. You yourself, I was like, oh my goodness, like she has done more in her time on Earth than I think me and Jeff combined. And
No kidding.
Seriously, so I was just like, if you threw down some of those logos and maybe even just like 5 words per logo, right? For your whole team, like Grammy award-winning album, like what, you know what I mean? As an investor, I'm like, okay, credibility, like hearing all the stuff that you were saying and throwing some logos on there, just one, it gives a lot of comfort, and two, kind of makes me feel like what the heck you're talking about. So I would say those are kind of the initial ones for sure. Jeff, you have any thoughts?
Yes, yeah, and I think George brings up some great points there. I'll just kind of keep going on the team slide. Totally agree with George. If you put some logos on there, you've got some amazing talent, and having the logos associated with that, I think would be helpful. My initial thought was okay, you have Rockstar, and then your CTO, and then you mentioned there's another CTO, and I was like, wait, you've got two CTOs, and then I was and then I figured out that it was your advisor. But I thought the team slide was very powerful, just your team. I think it could be better if you had some of the logos you mentioned, Universal and some of the other experience. The other thing that kind of goes along with that, that was kind of a, blow me away slide, the team. I would almost put your experience up front and maybe start with like a little teaser almost that says, this is who I am. This is some of the experience I have. I've done this and this and this. And it immediately establishes some great credibility for you to dive into this whole space. Because up until the team slide, I was kind of wondering, I was like, okay, so why are you doing this? What is your, is this just kind of a passion or an interest that you have? It wasn't until that team slide that it was kind of like, wow, okay, you get this stuff. And I think there's a ton of credibility there. I would almost establish that credibility up front. And then as you're talking about your team, you can re-emphasize and just briefly hit on some of your experience at Universal and some of the things that you've done that way. But we already know that you're a rock star leading into that. And then, maybe spend a little bit of time on your CTO and then your advisors. And I think you'd be golden. So one idea there that might be helpful. The other thing that I wanted to mention was on there was go a couple more slides in. There was one slide where, let's see, it's after your team. I think it was right. Nope, next one. Okay, actually it was back as, yeah, right. I think it was actually right after your team. You were talking to the revenue and some of the points, and you left it on the slide for a long time, and it didn't have a lot to do with, I'm trying to remember which slide it was. It may have been this one, but it seemed like some of the stuff you were talking about wasn't really relevant to the slide, and you could almost move on. I wish I had that in my notes here. But one thing, I think as you're going through that presentation, you can skip on your slides. You have so much going in terms of what your story is. You don't really have to stall out on the slides. The other thing I wanted to mention, George brought up the point about the acquisition or potential acquisition. This can be a positive and a negative. And so you kind of have to go to, who your audience is. As an angel investor, especially in this market, I might feel kind of comfortable having you say, hey, we've got an option going, if we wanted to take it, we may have some exit opportunities, and here's what they might be. That's actually probably a good thing. In fact, I kind of like the way you hit that at the front end. I think there was a point before you got to the last slide where you actually talked about, possible exit strategies is like, I don't know if I'd come right out and say those are exit strategies, but I like the way you put it in words, where you said, this is an opportunity. If we decided at some point that we wanted to go down that path, then we have some potential opportunities there. But then you came back and then you kind of hit pretty hard at the very end on the exit strategies. And it almost made me feel like you were leaning towards that because you kind of double tapped on it. I would probably leave that last slide off, have it as an appendix slide that you can hit on. people kind of jump into that and are interested. But to George's point, if you're talking to a venture capital firm and institutional money that they're trying to get a 30 to 50x return out of this, they like the fact that they're in early, they see a huge opportunity, and they want to know that you're in this for the long haul. They don't want to get in 2 years and have you sell for a triple or a quadruple. That would be just kind of an okay scenario for a VC firm. Might be great for an angel investor, but VC firms, they would kind of go, yeah, that was our big shot here, and you just sold out too early. So keep in mind who your audience is. George and I, we would not be considered institutional, and so I was fine with you talking a little bit more about the equity, just in terms of me personally.
Yeah, for sure. Personally, me as well. Just VC institutional wise.
Yeah, it's a good point to bring out. Just again, know your audience, and if you are talking to VCs, their mindset's going to be different, because they need this to be a potential fund returner, and with the traction that you've shown already and the opportunity, I think you've got something there that could pique interest in legit VCs. So the last thing I'm going to mention is you did end with the exit scenario slide. I would almost suggest that you combine the other two ending slides, the ask and the use of funds. And I know this is something Tim always hits on, but I thought it was applicable here, that if you end with your ask slide and the use of funds right there, that's going to be the last thing. That is the slide that typically gets the most attention when you're presenting or when you're pitching. And so leave that up when you go into Q&A. Leave that up there. This is what we need to get to where we're going, and here's the use of funds. And you can end with that slide with your contact information, on that same slide. I've seen that done very effectively. So a couple things that might be helpful, but overall, again, I'll say you did a fantastic job presenting, and this is a cool company.
Thanks so much. Appreciate that advice. And I think that's a great point of leaving up the last slide.
Awesome.
You really did kill it, seriously.
So we're going to wrap things up here with the question we ask at the end of each of these. George, I'll let you go first. And given what we just heard from Kristen and her presentation, her deck and everything, after hearing this, would you take her into due diligence as an investor?
Honestly, yeah, I would, which is not the most typical, but I would. I definitely would.
Yeah. And I'm going to say that I would as well. And I'll tell you a couple of things that really stood out. One, I think your experience and that credibility that you built there with your team and everything was a big factor. And I think the other reason I'd want to dive in a little bit deeper is the traction that you have. You've already got traction. I actually love the way you ended it and said, in the last 10 minutes that I've been talking, we have generated over, what was it, 1 million ads or something. I'm like, that's awesome. That's amazing. This is a huge potential opportunity. So yeah, I would definitely want to dive in a little bit deeper and see what you got. So great job. We'll kind of leave it. Any last comments you had, Kristen, before we sign off?
I just hope all of my next investor calls end like this one.
Yeah.
Well, a lot of times they won't give you a lot of feedback.
Yeah.
And so hopefully that's what we're able to do that pretty openly, and hopefully it's beneficial. But you do a great job presenting, and I think your investor calls are going to go well because of that.
For sure.
Thank you so much. Appreciate it.
Well, we'll sign off, and Kristen, we'll ask you to stick around here afterwards. We'll just chat for a minute. But before we do, just wanted to remind everybody, Thank you for listening in, and wanted to remind you to check out the pitch deck book by Tim Cooley. If you are looking to present to investors, and you want to present like Kristen did, she hit all of the points. Tim's book can be a great resource to make sure you're not leaving stuff out. Also, I'll just mention from George and myself, if you need help on your financial modeling and creating a great financial model and the slides that go with it, like Kristen has, then let us know. We'd love to help you out. We've got a special offer for those of you that listen in on the PitchUs podcast. And I will mention that Kristen's actually a customer of Forecasters. So we're excited to have you on here, and it was fun to see you pitch.
Thanks so much.
All right, we'll sign off from there. And thanks again, Kristen. Great job. And thanks to all our listeners.